Let me get one thing clear for you. Size matters. And no, I'm not talking about anything else except your account growth. You can be profitable, even consistent, but if you're not pressing size when it counts, you're going to be stuck. You're going to be working like a pro, but you're going to be getting paid like a hobbyist. That's why today in this video we're going to be talking about exponential bet sizing, the lever that will separate traders who grind from traders who scale. The main talking points are pretty simple. We're going to be going over the problem, which is most traders risk the same amount on every single trade. And that's pretty much like betting on pocket aces, if you know anything about poker, and the weak hand of a 9-2 in the same way. And that is a problem. We need to scale differently. Now, the truth about growth is that 80, 90, hell, 100% of elite traders' profits come from just a handful of basic setups or trades. They essentially know where to push their money, and they also know where to step aside. We're going to be going over a grading system that pretty much breaks down your trades from A+, B, C, and D. On A+ trades, what we want to do is pretty much press very big. We're talking 5x the base risk. On B setups, we are going to be trading with a size that's meaningful, something like 2 times the risk. C setups will be 0.5, and I'm not talking risk reward, I'm talking size. And then D setups, you're not feeling it, the market's choppy, you're going to step aside. So we're going to compare two different traders over 20 trades. Sure, it's going to be theory. And we're going to be assuming that their system has an edge. If you don't know what an edge is, at the end of this video, I'm going to show you the system in play, my trading system. The two scenarios are going to be simple. Flat risk sizing, essentially the first trader will be risking 1,000 per trade, no matter what the setup is. The second one was going to be using exponential sizing. Risks more on A+ setups, less on average setups, and skips the low quality ones when he's not feeling the market, or the market's choppy, or just things are not just moving. So that's the grading system. Now, how do we start? Practice on slower setups, plan risk before entering, logging results daily in your report card. If you don't know what the report card is, I'm going to show you at the end of the video how I'm going to prepare for the day. Now, let's cover something else. Why most traders fail with this? Two things. They size emotionally instead of systematically. They spread capital too thin instead of betting big when it matters. The final takeaway is pretty simple. Exponential sizing isn't reckless. It's precision. When you're ready, this is how you go from profitable to 6 figures and beyond. So let's start. The assumptions are pretty simple. Base risk, 1,000. Grading system, we went over it. A+, we're looking at a base risk of 5,000 plus or 5x. We're going to be lowering our exposure on B and C, and we're going to be skipping the D. The win assumptions are pretty simple. On A+ setups, we're looking at a 70% win rate. B setups, 55%. C setups, 50%. The distribution of trades out of 20 will be 4, 8, 8. Now, scenario 1 is flat risk, 1,000 each trade. A setups, 4, risk 1, wins 3, 1 loss. The net is 8,000. On B setups, now there's 8 of them here, the wins are 4, the losses are 4, so that gives us a net of 4. C setups, 4 wins, 4 losses, net 0, giving you a flat risk total of 12,000 profit. Now, I am talking about here taking proper trades using a proper edge and not just random distribution. I'm taking this into account that you are following an edge, because I did make a video not so long ago that explains that the first thing you ought to do as a trader is create a system with an edge. Then work on your risk management, mindset, and everything else. Because once you're doing the right things, having a system with an edge, you're going to have to work on other things. Where most people flip it, they create this solid risk management system. But risk management in a failing system, all that's going to do is make you lose money slower. Um, Moving on to scenario two is exponential sizing. So same scenario again, just different risk exposures. So you can see on the A plus setups, 4 trades times 5, that gives us, uh, so 3 wins times 15 gives us a 45,000 profit, 1 loss, 5,000 gives us a net of 40. And that's what I'm going to show you. I've actually put it into practice, and you're going to see me do exactly this live. B setups, 8 trades, 2,000 risk, 4 wins, 4 losses, 4,000 profit, 2,000 loss, giving you a net of 8. C setups, same thing. This time the risk is 500. Same thing, net 0. The exponential sizing gave you a profit of 48, whereas here it's 12. So that's something that we're going to be going over in this video with a little bit of um, explanations on some of the trades I've taken. The key takeaways before we go into my charts is pretty simple. Flat risk, 12,000 profit. Exponential risk, 48,000 profit. Same number of trades, same setups, same win rates, but one trader walked away with 4 times the outcome. The lesson is pretty simple. It's not about trading more, it's about pressing size when it matters. I'm ready to go into my charts, so let me take you there. Okay, best illustrate this, I'm going to bring you to a setup where I categorized it as an A plus trading day. Every single morning, what I do is I go through a little bit of a report card, something at the start of the day and at the end of the day. At the start of the day, in my essential moods section, what I do is I review the charts and I figure out 2 things. One, how am I feeling? That's number one. Like, am I, clear in my head? Did I rest well? Am I ready to trade with concentration? How's my time looking? But also, I review the charts. And on this day specifically, which was the 2nd of September, something very interesting did happen, and that was this, where the DAX throughout the Asian session went above um, the middle level, and essentially that kind of rejection. So we went with volume up, and then we came out pretty quickly out of this and started forming lower highs. The moment we were also below the VWAP, and you guys can see the rejections of the VWAP here. Um, what essentially happened here was I decided to trade with a 10-point stop and a 100-point take profit. Now the orange lines are obviously my losses, and that is the first loss. I did size up dramatically. I was using generally higher exposure. And what I did here was 10-point stop, 100-point take profit, a stop loss right there. And that was a defined entry. It was clear, took a decent loss. But then I did grab this profit here. So that puts me 9 plus. I don't get a trade until here, where I do execute flawlessly. I'm 8 plus up, 7 plus up, another stop loss. By the way, I listed my mood as 10 out of 10. I was feeling primed. I was focused. I had all the time in the world to sit and trade, so I was good. I did choose the DAX to trade for the beginning, and then I switched to the NASDAQ in the late session. 10-point stop, so that's 3 stops, 1 take profit. There's 1 more take profit, 1 more. I did close one early. I think it's this one. Yeah, this one here, unfortunate, and I didn't re-enter. So the day ended like phenomenally well. Then I bring you to the New York session where we formed this triple top, and I execute this one, and I'm talking 20-30 minutes in, I've already hit the take profit. You can see I don't open any more trades beyond that, so I was done. But let's count this up real quick in terms of points. Minus 10, plus 9, plus 90, plus 80, plus 70, plus 170, plus 270, plus 260, plus 250. This one here wasn't a full take profit. It was 77 points. So, I mean, count it up. It's phenomenal. And I'll just, not sure how I'm going to do this in terms of history. Anyway, it was a 40 plus K on this. 40,000 plus on this. But the main criteria happened in the scaling and the grading. So The exponential sizing did allow me to keep a very tight stop with a wide take profit. There are multiple ways to expose using, well, however you want to trade, but I've got a bunch. One of them is to use my compounding tool. The other one is to trade with no stop, but have a different money stop. And then obviously this would be another one. But this is not something you do every single day, because if you were to bring yourself into any other day where the market would have been maybe ranging, you would be getting stopped out left, right, and center. The main reason for my classification came from my mood. I was very focused as number one. And number two, we had the technical classification where there there was a major rejection of a zone with strong volume, lower highs. We were constantly below the VWAP. I mean, the whole day we just stayed below the VWAP, telling me that any buying pressure towards the upside should be sold, and I sized up. Um, so yeah, that's pretty much it. I hope this makes sense, and I'll see you in the next video then.